Hello everyone, welcome to the virtual classes. So, uh, in today's session, we will solve one problem from 2019 question paper that is related to income from house property. Already I posted a question in our WhatsApp group. Please all of you copy that question into your notes. We will solve it in today's session. So this is a question. First I will explain you the question, then we will move to the solution. Srimati Indira owns 4 houses. House property 1 is let out for a business purpose. That means it is given for a rent for a commercial purpose. Anyhow, whether it is a residential purpose or a commercial purpose, if it is given for rent means it is let out property for our calculation purpose. Then house property 2 is occupied for own business. So this we need to exclude. The house property 2 is occupied for a own business purpose. That means it comes under income from a business. It will never come under income from a house property. So while calculating, completely ignore house property 2. Then house property 3 and house property 4 are occupied for the own residence. I told you, sometimes they will give this kind of situation. They will give two different houses and they will mention it as a used for own residence purpose. That means self-occupied. Whenever they give two self-occupied houses, you need to calculate gross annual value for both the houses. After calculating gross annual value for both the house, you must take the highest gross annual value, the highest GAV house as self-occupied. Okay, I am repeating it. The GAV gross annual value for which you will get highest value, that is self-occupied, and which you get lowest GAV out of these two self-occupied houses, house property 3 and house property 4. The lowest is deemed to be let out property. So deemed to be let out property means it is also same. For our purpose, it is like a let out property. The calculations, whatever we do for let out property, same calculations we will do for deemed to be let out property. Okay, understood? See, in this question, they are given 4 houses. House 1 let out, okay, let out property. House 2 used for own business, so ignore it completely. It comes under income from business. Now we are doing income from house property, so ignore the house 2. And house 3, 4, they said these both are used for self-occupied, but as for income tax act, we can have only one self-occupied. Okay, if you have more than one, we will consider deemed to be let out. Okay, how we will decide which is let out, which is self-occupied and which is deemed to be let out? Based on the GAV. If the gross annual value of one house is more, that we consider as a self-occupied. The lowest gross annual value we consider as deemed to be let out. Okay, these are the 4 houses. I am repeating it again. Please don't do the mistakes. House 1 let out property, house 2 let out for a used for own business, that means ignore it. House 3, 4 both are self-occupied. In this, find out up to GAV. Highest GAV will become self-occupied house, lowest GAV becomes deemed to be let out property. So information it is given: municipal value, fair rental value, standard rent, annual rent, unrealized rent, municipal tax, paid by owner, paid by tenant. So these are the information given. Determine Srimati Indira's income from a house property for the assessment year 2019-20. This is a question from 2019 question paper. So now we will move to the part. So already I made a table. So you also please draw the table. Computation of income from house property. I will make it income from house property. computation of income from house property. Okay, and this is assessee name Srimati Indira. Assessee Srimati Indira. So mention the previous year 2018-19, assessment year 2019-20, and she is a resident. Now you all know the format up to GAV. You all know the format. So fair rental value or municipal value, whichever is high. Then notional rent, standard rent, whichever is less. Expected rent, actual rent. So whichever is high, you will get a GAV. In that less tax, you will get a NAV, net annual value. Then we can find out the total income from the house property. So now in a problem it is given 4 houses, but I made only 3 columns. Okay, why only 3 columns? Because I told you house 1 is let out, house 2 use it for own business, so ignore this. Okay, house 3 and house 4 we need to calculate till the GAV, then we will decide whether which one is self-occupied, which one is deemed to be let out. Okay, so first house 1, I will mention it as LOP. House 3, we don't know whether it is deemed or self-occupied. House 4, again we don't know whether it is deemed to be let out or self-occupied. We will do the calculation till the gross annual value, then I tell you which is self-occupied, which is deemed to be let out. So now we will start the calculations. First, municipal value. For house 1 it is 60,000. Municipal value for house 1 is 60,000. House 2 ignore completely. House 2 municipal value 1,86,000 and 1,90,000. 1,86,000 and 1,90,000. So municipal value for house 1, house 3 and house 4. Now we will see the fair rental value. 78,000, then 1,54,000, 1,90,000. House 1 78,000, then house 3 1,86,000, sorry, 1,54,000, 1,54,000, then house 4 1,90,000. So now, so municipal value, fair rental value, whichever is high. So in this 2, which is the highest one? 78,000. In house 3, which is the highest value? 1,86,000. 1,86,000. Then house 4, which is the highest one? 1,90,000. Both are equal. So for this we call notional rent. Now next is notional rent or standard rent. From that, whichever is less. So I just copy the notional rent, same values, notional rent. Then standard rent. So find out the standard rent for house 1. What is the standard rent given? Standard rent for house 1 is 72,400. 72,400 is the standard rent. So for house 3, what is the standard rent given? For house 3, 1,50,000. House 4, 1,80,000. This is 1,50,000 and house 4, 1,80,000. Correct? Yes, 1,50,000 and 1,80,000. from this whichever is less. So the lesser value from house 1 is 72,400, correct? 72,400. Then 1,50,000 is the less one, and 1,80,000 is the lesser value. So I just copy the only these items. It's not coming. Okay, I will just type it. 72,400 is the lowest one. Then 1,50,000. Then 1,80,000. For this total, we call expected rent. This total is expected rent. This total is notional rent. Okay. So now expected rent or actual rent, whichever is the higher, we need to calculate. So expected rent is how much? 72,400. Then 1,50,000. Then 1,80,000. This is expected rent. Now we need to find out actual rent. So for actual rent, it is not directly given. They had given annual rent 84,000 for house 1, and also they had given unrealized rent 7,000, correct? So to get actual rent, what we need to do? Annual rent minus unrealized rent. See here, annual rent how much? 84,000 given. 84,000 annual rent minus 7,000 is unrealized rent, correct? Annual rent minus unrealized rent, you will get actual rent. So how much is the actual rent? 67,000. 84 minus 7,000. 67. 84. No, right. In 84,000, if you minus 7,000, 4,000 gone, 80, then 77,000 it comes. 77,000. Please, all of you use your own calci. I'm not using calci. Okay, calculate on your own. 84,000 minus 7,000, you will get 77,000. So this is actual rent for house 1. For house 3, actual rent is not given because it is self-occupied houses, so there is no rent for this. They said both are self-occupied, that is why there is no rent. So show it as a nil. Whenever some information is not given, show that as nil. Now find out the gross annual value. Okay, so whichever is less in this, that becomes the gross annual value. So the lesser value in this is 72,400. 72,400. This is gross annual value for this house. And 1,50,000 gross annual value for house 3. 1,80,000 gross annual value for house 4. Now tell me, which is self-occupied and which is deemed to be let out? House 4 is self-occupied. House 4 is self-occupied house. Self-occupied house property. House 3 is deemed to be let out property. Deemed to be let out property. and house 1 is let out property. Now you understood. So now come to this part. See, whenever it is a self-occupied property, I told you in a previous class itself, okay, self-occupied property will be nil, okay, till the net annual value. So it will be nil till the net annual value. It is nil. So deemed to be let out and the let out property we need to calculate. Self-occupied property always it is nil for the net annual value. Now less municipal tax paid by owner. Okay, tax paid by the owner. Now that we need to find out how much tax paid by owner. Tax 3000 rupees tax paid by owner 3000. Tax paid by owner is 3000 rupees. So deemed to be let out property. How much tax paid for house 3? 12,000. For house 3 it is 12,000. For house 4 it is nil. No need to show this. Okay. Don't show that. Because till the net annual value it is nil. Whatever you are writing in that column it is useless. So now how much it becomes net annual value? Net annual value 72,400 minus 3,000. That means 69,400. Correct? 600 plus 2,000. Yes, 69,400. Then 1,50,000 minus 12,000. 1,38,000. 1,38,000. So 1,38,000. Correct? Yes. So this is a net annual value for house 1, 69,400. House 3, 1,38,000. House 4, it is nil because house 4 is self-occupied property. Now they asked you to calculate income from a house property. They were not asked you to calculate net annual value. You need to calculate income from house property. For that you need to show some more calculations. What is that calculations? Just do the deductions. For that I will insert one more column. Sorry, row. Insert row below. Okay. Now less standard deductions under section 24. So you need to do the standard deductions. Less standard deductions under section 24. Now which is the first one? The first one is 30% on NAV. Correct? Shit. 1 second. The first one is 30% on NAV, and the second one is where it is, and the second one is this is 30%. Why it is gone? Wait, 30 percentage on NAV. Okay, this is first one, and second one interest on bank loan. Interest on bank loan. Okay. I will add one more column. Sorry, row. Insert row below, just to show the income from house property. Income from house property. So now do the standard deductions. So 30% on NAV, that means 69,000. From that 69,000, just find out 30%. 69,000 into 30 divided by 100. You will get 20,700. Wait, sorry. 30 divided by 100. Yes. So 20,700. This is 30% on NAV. And loan, there is no loan for this, so it is nil. And 1,38,000 to 30%. Please all of you calculate. 1,38,000 into 30%, 41,400. And interest, it is nothing. So here it is nil because nothing given. It is nil. Interest also nil. Okay, now the income from house property for house 3 minus 1,38,000, you will get 96,600. 96,600. And for house 1, 69,400 minus 20,700. You get 48,700. So house 4, it is nil. So add both, you will get income from a house property. Total income from a house property, 48,700 plus 96,600. Total income from house property is 1,45,300 rupees. This is the final answer. So I hope all of you understood this. I will give you one more problem for assignment. So please, if you not understood anything, you can ask me the questions, you can ask me the doubts. This is a 14 marks question in your 2019 question paper. I will give you one question from 2018. Okay, solve it on your own. Thank you so much. Have a nice day. If you have any questions, please ask me, and watch this video repetitively so that you can understand everything completely.